Good evening, students. Good evening to all of you. A very good evening, students. So, students, the first and foremost, मैं अनाउंसमेंट आप लोगों के लिए करने जा रहा हूँ स्टूडेंट्स। ये प्राइस हाइक वाला बहुत ज़रूरी है स्टूडेंट्स। ये प्राइस हाइक का अमेंडमेंट के कॉन्टेस्ट में तो उस केस में आप नोटिस करना कि क्या है ये सिचुएशन। इन द केस ऑफ द प्राइस हाइक स्टूडेंट्स, आज रात को 11 बजे के बाद, कैन यू सी दिस वन स्टूडेंट्स? ये देखा स्टूडेंट्स, इन दिस रिगार्ड, तो यहाँ पर 11 बजे के बाद से स्टूडेंट्स आप खुद ही देख रहे हो कि देयर इज अ प्राइस हाइक व्हिच इज गोइंग टू हैपन। प्राइस हाइक स्टूडेंट्स ये होने जा रहा है और इसी वजह से आप सारे स्टूडेंट्स लोगों को, आप अपने फ्रेंड्स, प्राइमरी, अपने जूनियर्स, ये सबको ये इत्तला कर दीजिए स्टूडेंट्स अबाउट द फैक्ट दैट दिस पर्टिकुलर प्राइस हाइक व्हिच इज गोइंग टू टेक प्लेस। और ये जो प्राइस हाइक होगा स्टूडेंट्स, प्लीज डू लेट देम नो अबाउट इट, ताकि सारे के सारे स्टूडेंट्स अभी भी मौका है। अब कुछ अराउंड रफली अराउंड 3.5 घंटे के आसपास प्राइमरी टाइम रहे हैं उनके पास है। सो 3.5 घंटे में वो बचत कर सकते हैं। देख रहे हो स्क्रीन में 5,850 तक रुपए की वो बचत कर सकते हैं स्टूडेंट्स। काफ़ी होते हैं स्टूडेंट्स आज के ज़माने में, और आर्टिकलों को तो पता ही है स्टूडेंट्स। तो ऐसे केस के लिए स्टूडेंट्स आप लोग प्लीज़ इसका इस्तेमाल कीजिए। एंड देयर इज़ प्राइमरी सिचुएशन जहाँ पर आपको ये डेफिनेटली क्या है, बेनिफिट आपको मिल जाएगा। आज रात को 11 बजे 11:59 तक ये स्कीम एप्लीकेबल होगी। उसके बाद नेक्स्ट मोमेंट पे सीधा पूरा सिस्टम अपडेट हो जाएगा और एक नई प्राइस से स्टूडेंट्स ये क्या हो जाएगा, ये स्टार्ट होगा। एग्जिस्टिंग प्राइस पे आपको 10% का एक्स्ट्रा डिस्काउंट मिल जाएगा इफ यू पुट और यूज द कोड CADS। एग्जिस्टिंग प्राइस में आप लोगों को ये 10% का आउटराइट डिस्काउंट मिल जाएगा इफ यू यूज द कोड CADS स्टूडेंट्स। इज दैट क्लियर टू ऑल ऑफ यू? फाइन स्टूडेंट्स, दैट एग्जैक्टली इज द पॉइंट। तो लीजिए स्टूडेंट्स, ये सिचुएशन है और अब चालू करते हैं स्टूडेंट्स। फर्दर अब हम कंपाइलर सेशन स्टार्ट करेंगे स्टूडेंट्स। आगे लेट्स स्टार्ट विद आवर सेशन ऑन द कंपाइलर साइड। तो स्टूडेंट्स, कंपाइलर सीरीज में अब ट्रांसफर प्राइसिंग के हम एडवांस लेवल पर आ चुके हैं स्टूडेंट्स। वी आर नाउ इन द एडवांस लेवल। कल की क्लास में अगर आप देखो तो व्हाट वी हैव डिस्कस्ड, इफ यू ऑल कैन रिकॉल, एक बार जल्दी से कल के लेक्चर्स की तरफ मैं लेके जाता हूं आपको। बताइए स्टूडेंट्स, जो कल के सेशन में थे, अनफॉर्चुनेटली जिनेश, माई फोर्टे इज ओनली ऑन द डायरेक्ट टैक्स लॉ। ये जो आप बोल रहे हो लॉ में, ये मेरा फोर्टे नहीं है। तो स्टूडेंट्स, यहाँ पे एक मिनट स्टूडेंट दीजिएगा, मुझे बस एक मिनट दीजिएगा। अब आइएगा स्टूडेंट्स इस कॉन्टेक्स्ट में कल के लेक्चर में स्टूडेंट्स मुझे बताओ लास्ट में गुड इवनिंग अजीता जिनेश, मैं लास्ट में बताता हूँ, अभी जल्दी से कर लेते हैं हम लोग, ये चर्चा बाद में करते हैं जनरल टॉक्स। तो लेट्स लुक अपॉन टू दिस वन नाउ। इस केस में अगर आप देखोगे कल जो हमने लेक्चर जो स्टूडेंट्स किया था, हम लोग जो पहुंचे थे स्टूडेंट्स, आई थिंक वी हैव डन यस्टरडे मल्टी ईयर डेटा किया था, वहां तक हमने ये चीज कवर कर ली थी। We have done till multi-year data, and that is what we have discussed in the last lecture till yesterday. अब हम लोग स्टूडेंट्स आगे बढ़ते हैं, लेट्स मूव फर्दर। मैंने मल्टी-ईयर डेटा का बताया था और फिर मैंने कल के लेक्चर के जरिए आपको ये भी बताया था कि किस तरीके से यू हैव टू यूज योर मल्टी-ईयर डेटा जो आपको दिए जाते हैं। सॉरी, आई एम जस्ट पुटिंग इट इन हिंदी, आई विल यूज इट इन इंग्लिश, आई एम एक्सट्रीमली सॉरी। So many students would be worried about the fact that suddenly how come this Hindi has come. So students, in this context, as it goes, you can see here itself students, you can see here in students, in this context, that we have discussed about the multi-year data. What was this is the only area students, I'm telling you, ICI so far is trying to ICI so far we're trying to, in this context, in this situation students, ICI has targeted the MCQs and the case studies. First and the foremost students, is this, that whether this multi-year data concept, is it applicable if the SSC is using the cup method? Say students, is it, if the SSC is using the cup method, is the multi-year data is applicable? And the answer to that students is no. The multi-year data students is not applicable if the SSC is using the cup method. That is point which you have to be very careful about it. So that is one thing which has been there. Multi-year data also you have to see the current year and the last 2 years. For that last 2 years you need to take up this particular data. So if there is more than one comparable, always ensure to take up this multi-year data for the 3 years. Okay, so that was the last point that we discussed yesterday, and therefore one of the MCQ which was being there, I thought just to let every one of you are aware of it. Now let's look upon to our next particular point, friends. This is again a very important question. Friends, this is a concept of a secondary adjustment. All of you pay attention to this particular part. All of you students just pay attention to this part, students. So if you see over here, in this context, herein, the concept of secondary adjustment, students, all of you are aware, 92C. All of you are aware of this concept of secondary adjustment, students? Isn't it? Now, so far as this secondary adjustment is concerned, if you will look into this one, students, what is the scenario? So if the primary adjustment, now what do you mean by the term primary adjustment? Primary adjustment, students, as you may be aware, that is a difference between good evening Amrish, good evening. The difference between the transfer price and the transfer price and the ALP, if that exceed rupees 1 crore, if that exceed rupees 1 crore, then in that case, students, what we say? We say that this will be what? This will be considered as a, then you, please students, one more thing, one more point. This is a very technical point, but an important one. Many students, what they do is that they, even if supposingly the difference between the ALP and the transfer price does not exceed more than 1 crore. Say for example, the difference is say around 40-45 lakhs. Still, these people have got the habit to keep on saying that this is a primary adjustment. Incorrect. Incorrect, students. Never use the word primary adjustment when the difference does not exceed more than rupees 1 crore. This primary adjustment and the secondary adjustment is only the term primary adjustment and the secondary adjustment. If there is a primary adjustment, then obviously, students, we need to follow up with the secondary adjustment. That is the relevance of that particular term. Do you all agree? If there is a primary adjustment, then there is a relevance of the term secondary adjustment. That is to say, only then the follow-up is relevant in this regard. Only then the follow-up is relevant in this regard. Do you all agree to this one? So, students, in this particular context, if you all see very carefully, we say that herein that only when the difference is more than 1 crore between the ALP and the transfer price, that it will be considered to be a primary adjustment. Okay. Now, as you all know, students, this difference, the Indian AE, be careful. This difference, the Indian AE needs to repatriate, students, within a period of, within 90 days. Within 90 days from what? From the relevant date. Within 90 days from the relevant date. So therefore, students, in this context, the Indian AE needs to repatriate within 90 days from the relevant date. That is what they need to do. Okay. And if supposingly there is a failure on the part of the Indian AE, there is a failure on the part of the Indian AE to repatriate the sum within 90 days from the relevant date, students, then all of you are aware it would be considered as what? It would be considered as a deemed loan. Do you all agree to this one? It would be considered as a deemed loan. Deemed loan. Only, students, when there is a failure to record. Never says that. See, this is the real challenge of the many students. Many students keep on uttering wrong terminology at wrong places, which you should avoid it, students. Otherwise, they don't give you marks. In fact, on the contrary, they will deduct marks. So this deemed loan, don't outrightly say that just because that the difference between the ALP and the transfer price goes more than rupees 1 crore, that it will be a deemed loan. No, you will wait for 90 days period from the relevant date. You will wait for 90 days period from the relevant date, and only if there is still a failure to do the recovery, that it will then be considered to be a case of a deemed loan. And if it is a deemed loan, students, then all of you are aware that if it is a deemed loan, it will result into a notional interest. Will it result into a notional interest, students? Answer is yes, it will be. Answer is yes, it will be. So deemed loan would be there, resulting into notional interest. Resulting into notional interest. And the notional interest, students, as you all know, interest rate. Now that interest primary rate, first of all, 90 days are two things to be determined. Here the entire game is two things. What is the relevant date and what is the interest rate? And the third one, students, what is the relevant date? Checklist. What is the interest rate? What is the interest rate? From when? From when? Students, the third question is, from when the interest shall be calculated? From when the interest shall be calculated? So, three questions, students. What is the relevant date? Question number 2. What is the rate of interest? what is the rate of interest? What is the interest rate? I'll say this way. And the last question is, from when the interest shall be calculated? This 3 is what you need to revise always at a students going forward. Revise only these 3 things. Your secondary adjustment is over. Going forward, revise only these 3 things, students, and your secondary adjustment is over. So tell me one thing. What is the relevant date? Now there are 3 to 4 criteria which is given. In a simple word, students, the first criteria is the date of the due date of filing of the return of income. When the adjustment is made suo moto, students. If the adjustment made is suo moto means the assessee has made it all on its own self. So if the adjustment has been made by the assessee all on his own self, that is what is considered as a suo moto adjustment, students. That is what is considered as a suo moto adjustment. So students, in this context, suo moto adjustment, then it is the due date of filing of the ROI. The due date, they will try to confuse you unnecessarily, which ICI is brilliant in doing it. They will give you, instead of that, what they will give you? They will give you the actual date of filing of return of income. So students, it will be like this, that the actual date would be, say, 25th of November. So they will say that 25th of November he has filed the return of income, whereas the due date is 30th of November. Due date is 30th of November, and then they will ask you that then there would be an interest calculation that will be involved. The notional interest, which is a secondary adjustment, that interest calculation would be involved, and therefore for all of you, what would be the date, students, that would be considered? What would be the date, students, that would be considered? The date that would be considered would be herein the due date of the due date of filing of the return of income is what has to be considered. Yes, Ajita, this this bad cold and cough. So that is the case. Maybe it will subside as the time will proceed further. I hope that all of you are clear with this one. Every one of you, friends. So what you're going to take, friends, would be the due date of filing of the return of income, which in this case would be 30th of November. I hope that every one of you are clear with this one. Now, what if the assessee is not doing a suo moto adjustment? What if, students, herein, in this context, students, herein, students, if you say that the assessee student has made a suo moto adjustment in this regard, what is your take on that, students, then? So if the assessee has made a suo moto adjustment, students, in this regard, we have said that it is a relevant date would be the date when the return of income, the due date of filing of return of income. And the second one, if the assessee is going by what, friends? If the assessee is going by the order date, meaning thereby the date, if the assessee has if the AO is passed the order and the order is accepted by the assessee, or maybe if the order is challenged further, students, if the order is challenged further, then the date when the ITAT, say for example, has passed the order, they will give you this kind of questions only. 2 things will be there: order which would be passed by the AO and then accepted by the SSE. Accepted by whom? By the SSE. That is one kind of a scenario which will exist. And the second one would be order herein which would be on the ITAT. So order would be passed by the herein order of the AO. Finally would be delivered by the ITAT, and this would be accepted. Finally accepted by the SSE. Accepted by the SSE. So the question to all of you is this, that the relevant date from which the 90 days will be counted. The relevant date, students, from which the 90 days will be counted would be the date when the order is passed or the date when the order is served. Which will be the relevant date, students, from which the order will be counted? Can you tell me that, students? Will it be the date when the order is passed or will it be the date when the order is served? So students, in this context, students, as I was telling you, it is a date when the order is passed. Exactly, students. So it is a date when the order is passed. So this is how the things has to be looked upon, students. The date when the order is passed. This is how the things has to be considered. I hope that every one of you are clear with this one. Every one of you are now clear with this one. So students, this is how the things has to be considered. Shall we proceed further? Say, students, shall we proceed now further in this regard? Perfect. In this context. Students, here in the last point, before we start doing the practical question, please mark this, the secondary adjustment to be very important for November, because in May attempt, nothing was being targeted, students. Nothing was being targeted. Okay, so nothing was being targeted, students, in this context, and that's the reason why. In this context, herein, we will have to, students, not Ajita, not served, the date when the order is passed. Can you see that? The date of said order. It is not served, huh? Keep that in mind, because in many a case this confusion occurs. Many a case this confusion occurs. In this context. Okay, so this is what it is the case, students. So therefore, in this case, in this context, not served, no, Aditya? I hope that now. Yeah. Because no, why I'm telling you? Because you are correct over here. You are correct here, because many places, students, at many places, this point is what has been written. I think you are aware of this one. At many places, students, this particular point has been written. Isn't it? So therefore, because at many places, this particular point has been written, therefore, in this context, students, in this particular context, this is what needs to be considered. Fine, students, this is what needs to be considered. Now let's proceed further, students, in this context. If you all are through, I think because that's everywhere services there, na? But here, please take a note of this one, because this is your common mistake. The mistake which you people do it over here is the mistake that you are going to do on the examination. This is thumb rule. The mistake that you people will be doing it over here. Yes, in the assessment also, all the places it is service of order. But here is the only place. That's the reason why this is the most tricky. There are one more place where there is a common mistake which people are going to do. So this is a classic particular area or the bastion of making the mistake, students. This is a classic area or the bastion for making the mistake. Is that clear to all of you, students? So let's have a look now further. Let's have a look further in this context. Now, if you see over here in this context, students, in this context, that herein the order date, students, which has been there, this is what you will be getting it in the examination. Now the last one, students, is the interest rate. Interest rate, just keep in mind one thing, students. How do you remember the interest rate? The interest rate would be the second point to be remembered, students. What did I told you? Checklist. 2 things. 3 things of checklist. 92C, 3 things checklist. First one, what is the relevant date? Second one, because relevant date is important, because from the relevant date 90 days will be counted. From the relevant date the 90 days will be counted. That's the relevance of the relevant date. Second one is about the interest calculation. The second one, students, is about what? This is the second one, students, as you all are aware, is about the the interest rate. So the interest rate, students, will depend upon whether the currency is denominated in INR or whether the currency is denominated in the foreign currency. So whether it's a foreign currency or whether it is INR. So if, students, this is the case of a foreign currency, students, if this is the case of a foreign currency, then you will take up the LIBOR rate. Students, the 6 months LIBOR rate is what has to be taken, and whatever is the LIBOR rate given to you, please add, students, 3%. Please add to that, students, 3%. Please add, students, to that 3%. Is that clear to all of you? Is that clear to all of you, students? And the second one, students, as you all are aware, and what is that? In the case of the international transaction which has been put up in Indian rupee, if the international transaction, students, is in Indian rupee, then what is that you do in this regard? You go with the, exactly, students, then you go in this context with the SBI rate. Now ICI, beautiful MCQ question they have targeted. They will give you the SBI rate of 2 dates. For you people, those who are appearing for November attempt, November 2022, you have the previous year 21-22. The previous year 21-22. So they will give you the SBI rate of 2 dates. Which are those 2 dates? First would be the 1st of the April of 2021. That is a date. And the second one would be the 1st of the April 2022. That would be the second particular date for which they are going to give it to you, the SBI base rate. Now you tell me in this context, which would be the previous year? Which would be the date? 1st April 2021? You are going to go with this, or you'll go with 1st April 2022? Which of the 2 previous year is what you are going to accept it? This is your MCQ question, students. I hope that all of you are aware of this particular point. Are you aware of this one? This MCQ question. So whether it would be 1st of April of 2021 or 1st of April of 2022. And indeed, it would be 1st of April 2021, students. The 1st of the April 2021 would be the answer. Don't make the mistake, because that's what the ICI has done it. They are talking about the SBI relevant to the previous year. Relevant to the previous year, students. I hope that all of you are clear with this one. All of you. So, students, in this context, in this particular context, students, in this particular context, this is what the MCQ question. You just have to be very careful about this. Now, shall we proceed further, all of you? So, students, now the third question. What is the third question? The three question checklist. Refer the checklist. Three things. One is what is the relevant date. Second is what is the rate of interest, and the third one is from which date how the interest would be calculated. Now students, although from relevant date there is a grace period of 90 days. Within 90 days from the relevant date you need to bring the money in India. Within 90 days from the relevant date you need to bring the money in India. If there is a failure to bring the money within 90 days from the relevant date, then in that particular case, students, what happens? Then in that particular case, students, what happens? Then in that particular case, students, what happens? If there is a failure to bring the money within 90 days from the relevant date, then we say that this would be considered as a deemed loan. This would be considered as what? As a deemed loan. And because that it is a deemed loan, because that this is a deemed loan, accordingly, interest would be charged. Interest will be calculated after the expiry of 90 days. Will the interest at the rate which we have just discussed above, will the interest at the rate that we have just discussed above, will that interest be calculated from the, will the interest will be calculated after the expiry of 90 days, or will it be calculated from the relevant date? From which particular point of time that the interest would be calculated. Now this is the dangerous one, students. And the interest would be calculated, many people says what? After the expiry of 90 days. That's a general thought process, isn't it? But don't make the mistake. It is not after the expiry of 90 days. It is from the relevant date itself. It is from the relevant date itself. Now students, two things. One is this, and second is the tedious part. Students, this is the second dangerous particular case wherein the students can make a mistake. Since I am touching upon on this concept, I am ensuring to stretch this concept to the tedious also. Students, every one of you know that the tedious compliance has to be done. Students, within that the 7th of next month. 7th of next month, and for the last month it is 30th of April. Every one of you are aware of this particular proposition, students, isn't it? Now, tedious compliances are of two types. One is to deduct the tedious. There's a deduction of tedious, and the second one is about what? The payment. The payment of tedious. So first you deduct the tedious, and thereafter the payment of the tedious. Now, say for example, students, there is the tedious has not been deducted at all. So there is obviously, then you have not deposited within the due date. If there is no TDS that has been deducted, then you would not have deposited the TDS within the due date. So the question therefore to all of you is, the interest which would be 1% per month or part thereof will be calculated from which date? The expiry of the due date. From there the interest will be calculated, or the interest will be calculated from the date when the assessee ought to have deducted the TDS and there is a failure on his part to deduct the TDS. From which date, students, the interest calculation shall be made? Quickly! From which date? The interest calculation, students, should be made in this regard. What is your take, students, on this? And to that the answer is, students, to that the answer is not from the 7th of next month, but if 1% will be no Ajita, 1% per month would be started from the date when there was a failure to deduct TDS. That's a game. That is the reason why I'm doing this comparison for all of you over here. This is the very reason why I'm doing this comparison, because that's the real game of the ICI. So there are two particular concepts wherein this particular, now make a thumb rule, students, make a thumb rule. In the two places where they have been giving you the grace date, but if there is a failure to, if there is a failure, students, to do what? If there is a failure, students, to do the compliance within that grace period, then what happens, students? If there is a failure to do the compliance, students. Yes, if there is a failure to do the compliance, students, within that grace period, then the interest calculation will begin not after the expiry of the grace period, but from the relevant date itself. I hope that every one of you are clear. Secondly, students, as you can see in point number 2, the TDS can be deducted. That is also possible. The TDS would be deducted, but the assessee would not have made the payment within the due date. Even that is possible. The TDS would have been deducted, and having deducted the TDS, the same has not been deposited, students, within the due date. So 1.5% per month or part thereof. 1.5% per month or part thereof. That particular amount will be recovered. That interest amount will be charged from which date? The date when the TDS was deducted. Is that clear to all of you, students? Every one of you are clear with this one, and this is what the situation is in this regard. So I hope that all of you are clear on this particular proposition, and this is how the things has to be considered. With that, now we are done with this particular 3 points, and if that is the case, students, let me switch to the compiler questions now. Are you ready, students? Okay, is there a one-time settlement? Students, just imagine this. This assessee, poor assessee, who is not successful to receive this money within that particular due date. Students, this assessee who is not successful to receive that particular money within that due date period, students, you can just imagine the plight of that assessee, what will happen. You can just imagine, students, the plight of the assessee, what is going to happen. Isn't it? This poor assessee who could not primarily recover this money from the non-resident AE within that 90 days period, what will happen? Year after year, this notional interest would be added. Year after year, whether the notional interest will that be added? To that the answer is yes. Year after year, the notional interest, students, would be added. The notional interest, students, would be added at the rate of 20.9664%. The notional interest would be added, at the respective rate, whatever we have discussed just now some time back, LIBOR or SBI rate. And therefore, is there any scheme of one-time settlement? Students, is there any scheme of one-time settlement? And the answer is yes, this is a scheme of one-time settlement. And the settlement scheme, students, you can see for yourself is this 18% is the rate, flat rate, and the surcharge also, students, is a flat 12% surcharge. Now this 12% surcharge is also applicable at various other, like exit tax also. This 12% as a surcharge, students, apart from this, is also charged in the exit tax. So in the exit tax as well, this 12% surcharge is levied. So that is where it is. So additional tax here, additional tax over here. In the case of the secondary adjustment, 12% surcharge is levied. The next one is there. One more place, 12% is there. Any idea of that one? It is the buyback tax. Remember the buyback tax in the survey tax? 20% is the rate. 20%, students, is the rate, and then they top it up. Students, they top it up with another 12%. That's the beauty of it. So they do top it up with another 12%, students. And therefore, in this context, what do we say over here, students? What do we say over here is that this plus that 12% top up that we do, this plus that 12% top up, students, that we all do. And that is what finally will fetch you the final answer. Is that clear to all of you? All of you are clear, students, in this case? Fine. Okay. So now it is better to remember this rate of 20.9664%. If you all can remember it. Nothing like that. Otherwise, remember 18 plus 12 plus 4. The effective rate, you can just calculate it, or else 20.9664%. Shall we now proceed with the practicals? One beautiful practical question is there, students, in this case. Vishnu polyfibers. This question, students. All of you just at least once read this question. Just read this question once. So, friends, all of you are through with this one? Now, in that particular case, students, what is that? We will look into it. So, Vishnu Polymers is an Indian company having transactions which are subject to transfer pricing regulations. In June 2021, the assessment for AY 2021 and 21-22 were concluded after due process under the law. In both the years, in respect of the transaction with its associate enterprise, the ALP has been determined in euro. So this is necessary for us, because then in that case the LIBOR plus 300 basis point is what we will consider. LIBOR plus that 300 basis point is what we are going to consider. Now for the assessment year 2021-22, the primary adjustment as translated into INR was rupees 90 lakhs. So this is what they have said it over here. So the primary adjustment, students, which they are mentioning it for the AY 21-22 students, the primary adjustment is 90 lakhs. And for AY 21-22, the same primary adjustment is how much? 2.4 crores. So one thing is for sure, when we talk about AY 21-22, will there be any secondary adjustment? For AY 21-22, will there be any such secondary adjustment that will be calculated? To that the answer is no. Why there will not be any secondary adjustment, students, which should be calculated? Because no secondary adjustment, students, will be calculated, for the reason being, as you can see over here, students, no secondary adjustment would be calculated, for the reason being, students, indeed, because the primary adjustment which you can see over here, the primary adjustment, students, which you can see over here is not more than 1 crore. I hope that all of you are clear with this one. The primary adjustment, students, that you can see it over here is not more than 1 crore. I hope that every one of you are clear with this one. But for the next year, AY 21-22, the same is 2.4 crores. The same, students, is 2.4 crores for the transaction with PK-INC.Melbourne. PK-INC.Melbourne. So in that particular case, students, in that particular case, for AY 21-22, definitely, students, will there be a secondary adjustment if supposingly the SSC has failed to repatriate the money within 90 days from the relevant date? And the answer is yes. The assessment order was passed on 12th of June 2021. Fine. The SSC is inclined to accept the same and not prefer an appeal. So students, the date of passing of the order. The date of passing of the order. Now you are required to answer the following in light of the above. How will the quantum of primary adjustment be treated in the books of the SSE vis-a-vis the secondary adjustment? So quantum, how will be the quantum of the primary adjustment be treated in the books of the SSE vis-a-vis the secondary adjustment? How will the aforesaid completed assessment impacts the SSE? So students, how will the quantum of the primary adjustment be treated in the books of the SSE vis-a-vis the secondary adjustment? What is your take on that one? So obviously students, this is a theory part of it. So the primary adjustment will result into that secondary adjustment if the money is not repatriated within 90 days period. Whatever we have discussed, that is what you have to write. What are the steps are to be taken? Point number 2, students. Point number 2, students. What are the steps which are to be taken to prevent the secondary adjustment, students? Again, I have told you about the same. What are the steps that has to be taken, students? Isn't it? Will there be any secondary adjustment in the hands of the SSE if the required steps are not been taken? Yes. And you are required to honor the concept below. This is purely a theory question. Do you all agree to this, students? And the next one is about calculate the secondary adjustment for previous year 21-22, assuming that the money hasn't been repatriated during the period. Now be careful, students, for previous year 21-22 that they are talking about it. So therefore, that is what you need to be very careful. Previous year 21-22. So current previous year. So just see the AYs which was there with us. We have this particular assessment here. So there is a change. This is assessment year 22-23. So previous year 21-22, students. So you can see the order was passed on. Some information is not drafted properly. Sorry. Just hold on. Hold on, students. This is proper. There are two different parties. So for assessment at 21-22, so here there are two different parties. One is which party? NINC. Singapore. That is one party. And the second one is PKINC. Melbourne, which is the second party. So there are two parties which are involved over here. NINC. Singapore and PKINC. Melbourne. These are the two parties, students, which are there. So with the additions which are made for NINC. Singapore, which is only of 90 lakh students, you will not be taking any secondary adjustment over here. But as far as the addition which is made with PKINC. Melbourne, which is 2.4 crores, will this result into a secondary adjustment if the money is not repatriated within 90 days? And the answer is yes. Now one more error which students can do. Students, can you see one more error is possible over here, which the students can do? These people can take up the aggregate, because there is a habit, isn't it? Many concept has got only the aggregate of the amount. If it is more than this, aggregate of the stay if it is more than this. This is what we have seen even in the equalization levy which we have just concluded. So there also, where in the aggregate payment, then the TDS under section 194O also, that what we have seen. So in all these cases, the emphasis was on the term aggregate. And that is where the real challenge will lie, when they are using this particular term aggregate, students. And accordingly, students, what we will say is this, that herein, that in all these particular cases, the notional interest in all these particular cases, students, the notional interest which has been there, the notional interest, students, will have to be imposed in this particular context for the individual category of additions, not for the aggregate category of the additions. So that 1 crore threshold has to be seen individually. I hope that all of you are clear with this one. The 1 crore threshold has to be seen individually and not for the aggregate. So now calculate the secondary adjustment for previous year 21-22. Now students, the order has been passed on 12th of June. So from 12th of June onwards, students, for how much is the interest for the previous year 21-22? So from 12th of June 2021, you will calculate the interest. Now one precaution to all of you students is this. While you calculate the interest, you will also include this particular date of 12th of June. You will, because they have used the word from the relevant date. So if it is from the relevant date, even this particular date will be included and counted as one, so as to calculate the number of days for which the interest would be charged. So if you see in the month of June, we will have 19 days. And accordingly, July full 31 days, so on and so forth. And the last one would be March, would be full 31 days. We will just refer it, this calculation in this regard. But it is important that you people do this calculation. See for yourself. 293 days. For previous year, 21-22. And that is how 19 for June, July 31, August, September, October, November, December, Jan, Feb and March. So for 293 days period, student, the interest would be calculated. This is a pro rata approach. And what would be the rate? With that 300 basis point, with the 300 basis point on the LIBOR, and LIBOR is 2.6%. 2.6% students happens to be the LIBOR. So 2.6 plus 3%, you do the total, then effectively you get 5.6 over here. Effectively you get 5.6, and on that 5.6 you apply 5.6 on 2.4 crores, and finally that is what you will get it, the amount of your the secondary adjustment. 5 students. And last students is about the additional tax. Calculate the additional tax payable if the Indian AE wants to exercise the one-time settlement option on 31st of October 2022. Students, one thing I should tell you students, that when the option to pay the additional tax is exercised, it is on the excess money. Yeah? On this excess money, students, which is there, you apply this 20.9664%. On this excess money, students, you apply this 20.9664%. So this is what you actually do to calculate your additional tax. This is what you actually do to calculate what? Your additional tax amount. And therefore, students, this excess money I have already told you what it comprises of, and this 20.9664% also, students, this is what it is. So while calculating the excess money, students, are you going to load the interest element as well? Are you going to load the interest element as well? To that the answer is no. No loading is required so far as the interest element is concerned. Excess money simply would mean the difference between the two, and which is that two? I have already told you the same. I have already told you the same, friends. Is that clear, friends? All of you could understand this one now? Clearly, categorically? And that exactly is the case, students. So with that now, students, we are done with this particular part. Any doubt, students? If not, then let's move on to our next concept. With the practical. So this Vishnu polyfiber, students, please ensure to do it on the day of the examination also, because secondary adjustment chances for your attempt is very, very high. This 455 is an old one. It's the simplest one. So don't worry about this one. This is a simpler of the two. Now safe harbor, students, I have given one question in the compiler, but safe harbor, as you all know, the rates are yet to be notified. And since the rates are yet to be notified, we will not be going with this particular safe harbor right now. This is just has been given as a precautionary this thing, assuming that the rates would be the same. So that's the reason why, students, once the RTP students comes into picture, in this context, students. So therefore, in this regard, in this regard, the RTP of November 18 will be, supposing there are anything reference of that, we will be doing in that way. Towards APA is there. Although there is a hard, APA is a theory only actually. And I think all of you are aware, APA is nothing but a theory. Now we are into time limits and everything. Now students, transfer pricing is about to get over. Time limits, penalty, thin capitalization, and we are done with this transfer pricing then. We are done with the transfer pricing then, students. Now my only point is that, students, let us do APA theory once. Although this in the compiler session, we are not required to do this theory. It has got no relevance. But still, for the sake of our discussion, if you want, I shall do the APA theory with all of you. Because this November 22 attempt, the APA as a concept becomes one of the most important concepts for your examination. One of the most important concepts for your examination, students. APA. So that's the reason why let's deal with this APA once, and then we can proceed further in this context. So students, over here, the APA as a concept, students. Let's have a look. Students, as you all are aware, in the case of the transfer pricing, the maximum dispute which has been there, you people all are aware of this particular point. What is a dispute, students? The maximum dispute, students, which has been there is in respect of what would be the most appropriate method which is applicable to the transaction applicable to the SSE. So whichever transaction which is for which it is applicable to the SSE, what is the most appropriate method which is going to be applicable to the SSE? That is where, students, maximum dispute occurs. So students, this concept APA, first one thing I should tell you, this is a big hit in the transfer pricing arena. In the transfer pricing circle, students, the concept of APA is a big hit. Why I say it's a big hit? Why I say, students, that it is a big hit? For the reason being, in the case of the transfer pricing, this APA as a concept, students, advanced pricing agreement, this is an agreement which is entered between a taxpayer and a taxing authority to determine ALP or specifying the manner in which ALP shall be determined in relation to such international transaction. In relation to such what? International transaction. So what will happen is that, students, if supposingly whenever I am going to enter into the international transaction with my non-resident associated enterprise, okay, whenever students, I am going to enter into the international transaction with my non-resident associated enterprise, if what, students, if with him, students, I can sit down, if with the department, not with him, means with the department, before I enter into the transaction, if both of us sit down together and freeze what should be the ideal price at which the transaction should be undertaken, or what should be the transfer price at which the the transaction should be entered into. If that can be free, students, then at one stroke all the dispute will get vanished. Do you all agree to this one? At one stroke, students, all the dispute will get vanished or not? Answer is yes. You can see for yourself that by doing this at one stroke, all the dispute, students, is getting vanished. And that exactly is the point, students. So therefore, this is the reason why this particular point has been introduced. This is the reason why, students, this has been introduced. But obviously, this is a very ideal scenario that we are freezing the very price itself. This becomes a very, very ideal scenario that we are freezing the price itself. It becomes difficult and many times impossible that you can freeze the very price itself. So if not the price, at least we should be in a position to freeze what? The ALP. We should be in a position to freeze what? The ALP. Isn't it? So if we are in a position to freeze the ALP, even that sorts out our concern. Even students, that sorts out our concern. Is that clear to all of you? Every one of you are clear with this one? So with that, students, in this context, this is what it is. Now, taking the discussion further over here, students, here, if you see the meaning, students, please come to the meaning part, all of you. Again, the advance pricing agreement is an agreement entered between a taxpayer and a taxing authority to determine the ALP or specifying. So either what? It is the ALP itself, which is my point number one, or if not the ALP, at least specify the manner. At least specify what would the manner in which the ALP shall be determined. Either this or that. I hope that every one of you are clear with this one. Clear with this one, students? All of you? Perfect. Now, students, if you can take that discussion further. So what do we get it further? Now, APA, students, this is also a very important question. APA is meant for international transaction. Yes, for international transaction, the answer is yes. How about the specified domestic transaction? Is it also equivalent or applicable for the specified domestic transaction, students? What is your take on this one? To that, the answer is no. For the specified domestic transaction, this concept is no longer applicable. Do you all agree to this one? Yes. For the specified domestic transaction, this particular concept is no longer applicable. Just keep these points, small points are there, friends, but just keep them in mind. Okay, because what happens if they can ask you for safe harbor? Let me give you the comparison over here. If the same would have been a safe harbor rule, students, then you would have found that for safe harbor rule, it is applicable even for a specified domestic transaction. Safe harbor rule, students, is it applicable to a specific domestic transaction? To that, the answer is yes. But what about the case for the APA? Whether APA as a concept applies to a specified domestic transaction? Answer is no. I'll tell you one way to remember it, students, and you will also appreciate it. Students, you may be aware of this concept of the AAR, the Authority of Advanced Ruling. Now, so far as the AAR or the Authority of Advanced Ruling as a concept is concerned, what happens to that concept, students? The AAR as a concept, students, if you all look into it. Students, the AAR as the authority was originally meant only for the non-resident. Later on, even the resident were being included, but originally was the forum of the advanced ruling was only applicable for the non-resident, and the answer is yes. So here also the forum of APA is not applicable for the specified domestic transaction. The forum of the APA is not applicable for the specified domestic transaction. Now, if you see it over here, the period which is covered under the APA. So what is the period, students, which has been covered under the APA? So they have said it over here, not exceeding 5 consecutive previous years. So the period covered under the APA, students, if you can see it over here, not exceeding 5 consecutive previous year. That is point number 1. The second one, students, so it means that for that 5 years period, in this context, this is the period. But here in students, there is a very important of rollback of last 4 years is also given. So not only that you take up the APA and you get this particular APA to be implemented forward for a period of 5 years, even a backward period of 4 years is what gets covered from this. Even the backward period of 4 years is what gets covered from this. Okay, so that is your rollback provision. Now, maximum question, students, even you may be aware that the question would definitely be from the rollback part. And this is where we have to be extremely careful about this one, the rollback aspect. In order to reduce the current pending as well as future litigation in respect of the transfer pricing matters, rollback mechanism is provided for a period not exceeding 4 previous years preceding the first of the previous year for which APA applies in respect of the international transaction to be undertaken. So students, for a period not exceeding 4 previous years preceding the first of the previous year for which the APA applies in respect of the international transaction to be undertaken. APA can be applied for the transaction undertaken in the past 4 years. That is what we have discussed just now. Have a look to the condition, students. Now, to get the benefit of the rollback, the following conditions are important. And may I tell you, and please ensure that now henceforth that you revise for the APA, you only focus on the revision needs to be done for the conditions to be fulfilled for the rollback condition. The conditions to be fulfilled for the rollback condition. And what are the conditions? Point number A, international transaction is same as the international transaction to which the agreement applies. It is same, students, that is important. Is same as the international transaction to which the agreement applies. Point number B, return of income, whatever is the ROI, for the relevant rollback year has been or is furnished by the applicant before the due date. This is very important, students. Obviously, the first is no-brainer. Everyone knows that obviously if I have to roll back the APA to my past transaction, then the past transaction should be same as that of the future transaction. Only then we can even imagine or think of doing the rollback. That is point number 1. The second point, which is equally critical, students, is about the ROI factor. So here, students, for that particular period for which you want to do the rollback, you will have to file the return of income within the due date of section 139(1). Now here, students, there is a kind of a possibility of an MCQ based question that can be targeted, and this is what they can do it. So in the last 4 preceding previous year, students, there is a rollback that is possible. However, say for example, in one of the year out of the 4, in one of the year between in that particular 4, they have filed a belated return. So therefore, the question to all of you is that if they have filed a belated return in this particular case, students, if they have filed a belated return in this particular case, so therefore the question to all of you is what? What is the question to all of you? That whether for that year the rollback mechanism can that be applied? And the answer is yes. For that particular year, the rollback mechanism can be applied. Coming on the second point, whether the interest rates can that be charged? Whether the interest can that be charged? Again, the answer is yes. The interest that we are talking about it can be charged, or may I say can be added. So the interest definitely, students, would be added in this regard. The interest definitely, students, would be sorry, I'm just putting this one. I'm just taking another concept of ROI. Just apart from that normal consequence of ROI, just forget that. Let's only focus on this one. So therefore, if you file the return of income after the due date, so that particular year will become the ineligible year. It implies that for that particular year, the rollback is not possible. So out of the block of the 4 years, that year is out from the race. So what about the remaining 3? What about the remaining 3? Yes, remaining 3 will be available if they are also satisfying the other conditions. But the bigger question is this, that let's look upon to that 3 is only there, na? Can I extend one more because one became ineligible? Now, just because that one became ineligible, can I extend to one more, students? What is your take on that? If one became ineligible, then can I extend to that one more? What is your take, students, on this? Answer is no, you cannot. You cannot do this sort of an extension to one more and make it 4. You cannot do this sort of an extension to one more and make it 4. Is that clear to all of you, friends? Fine. And that exactly is the game. So now, friends, in this context, just read this non-applicability, time limit and binding, friends. The regs of the theory. I'll just join you in 2 minutes. Non-applicability, time limit, and this one. 2 minutes, friends. Give me the time. Sorry, students. We had this urgent meeting has come up. Now, friends, I hope that all of you have read the conditions over here. So, in this context, students, when you talk about this particular part of the non-applicability side, students, when you will talk about the non-applicability side, what do you all get it over here? So you can see it from this particular part, students, the non-applicability part, which has been there. In this context, the determination of the ALP of the said international transaction for the said year has been subject matter of an appeal before the appellate tribunal. Now be careful, students. You all know that the transfer pricing as a law, we all are aware, transfer pricing, students, as a law is completely transaction based law, and any law, students, which is a transaction based law, will have its own concept for any law, students, which is a transaction based law, students, definitely it will have its own concept. It will have its own concept for what? Indeed, being a transaction based law, it will be all about the question of facts, because it is to do with the transaction itself. And the fact that it is all about the question of fact, students, as you all know, the final fact-finding authority happens to be the ITAT. In this case, the final fact-finding authority happens to be the ITAT, students, in this case. And this exactly is the point, students. The final fact-finding authority is the ITAT in this case. So if supposingly, students, for that rollback period, the ITAT has already given the decision. For that rollback period, the ITAT has already given the decision. So that particular year will then become an ineligible year. That particular year, students, will it become an ineligible year? And the answer is yes, it will be. So we will say that year to be a case of an ineligible year, students. I hope that every one of you are clear with this one. Okay, but one more important point, because this is where some students are still under a great confusion. If any one of the year becomes an ineligible year, do you know what these people do? They actually extend one more year. Don't do that. Supposingly, if a particular year is an ineligible year, you are not supposed to push one more year and make it 4. That if supposedly out of 4, 1 is ineligible, your final rollback year will then be only 3 years. Okay, your final rollback year would be only 3 years, students. Now the next part, if you see over here, so this is, I think all of you are aware of it. So students, in this case now, on the non-applicability front, the next particular part, students, on the non-applicability front, students, see, this is very common. This is very common, students. So in this particular context, if you see over here, this is very common. Now when I say this is very common, what does it imply? That the application of rollback provision has the effect of reducing the total income or increasing the loss. Do you all agree to this one? Reducing the total income or increasing the loss, as the case may be, of the applicant as declared in the return of income of the said year. So has the effect of reducing the total income. So obviously, if I have declared earlier a higher amount of income, okay, so my own declaration in that return for the rollback year is on a higher side. The APA which has been taken for the transaction results into, if I adopt that APA, students, if I adopt that particular APA, students, then in that situation, then in that particular situation, students, in this context, if you see that obviously if that results into the lowering of the total income, then in that situation definitely you cannot take up the APA, because that will result into what? A refund. That will result into a refund, students. And this exactly is the point. So that will result into a case of a refund in this regard, students. I hope that all of you are clear with this one now. And now with that, students, you see over here point number B. This is what is your point number B, the app in this context. So one, we have seen that reduction of total income or increasing the loss. Reducing the total income or increasing the loss, one of the two happens. This is what it will be there. Now last one, students, the time limit. Please have a look to this one. In this context, the time limit part. So in the time limit part, in this context, if you all see it very, very carefully, in the time limit part, friends, if you see it very, very carefully, can you see the first one? Rollback application shall be made before the first day of the previous year relevant to the first AY, for which the application for APA is made in respect of transactions which are in continuing in nature. Transaction which is continuous in nature, friends, which has been there. So with this particular part, students, in this particular context, you will find that if it is a continuous in nature, students, if it is a continuous in nature, students, you can see for yourself. If it is continuous in nature, students, you can see for yourself that point number A, before the first day of the previous year relevant to the first AY for which the application for APA is made in respect of transaction which are of continuing nature from dealing that are already occurring, or what point number B. So if I remember, friends, JP Morgan, there is a continuous nature of transaction between Morgan Stanley and JP Morgan Chase. It's completely continuous in nature. So round the year it keeps happening, students. Round the year it keeps happening. It is between whom, students? JP Morgan Chase and Morgan Stanley. So round the year if it is keeping on happening, students, then in that situation the next question that arises is this, that the next question that what will happen is that, students, then if supposingly the party has taken the APA, supposingly, students, the party has taken the APA, students, then in that situation rollback application shall be made before the first day of the previous year relevant to the first AY. So obviously he will take up for the next, they will say, because every year by year this particular thing, every year by year, students, every year by year, students, they are in a position to, year by year, students, they are all in a position to do this particular work, Do you all agree to this one? Every year by year, students, do they agree to work in this particular way? And the answer is yes. And that is the reason why year by year, if they are doing this particular thing, so therefore the rollback application should be made before the first day of the previous year for which you want to take up that particular rollback benefit. So if you want to take up the rollback benefit, say for example you are making the rollback benefit from 1st April 2022, that is what they are going to give you the question. If you want to take up from 1st of April 2022, then in that particular case, students, then in that particular case, students, you will say what, students? That this is all the things has to be looked upon. This is all the things has to be looked upon. I hope that all of you are clear with this one. Fine. Now with that, we will now proceed further, students. And if supposingly this is not a continuous nature transaction, it is simply one of the nature transaction. This is not a continuous nature transaction. This is simply a one-off nature transaction. Then what happens over there? Then if supposingly this is not a continuous nature of transaction, it is simply one of the nature of transaction, students. Then like for example, this APA which I have taken, this is just for a contingency purpose that I am taking the APA. It's not that I am continuously dealing with that non-resident A on a continuous basis. In the first point number A, I am dealing continuously on a continuous basis. I am dealing with my non-resident A, whereas in point number B, this dealing or this engagement, students, is not on continuous basis. So if the engagement is not on continuous basis, then in that particular case, students, what happens? Whenever you want to undertake the transaction, students, you want to undertake the transaction, then means when you want to take up this particular thing, whenever you would want to go for the APA for the next transaction that you're going to do, so whenever you will want to start doing the next transaction for which you will make the APA effective, just before that transaction you need to make an application. Just before the transaction you need to make an application. That is point number B. So this is the normal thing, students, which has been there. Now binding on whom? Just like your AAR, students, authority of advance ruling, also you have done the same thing. The binding is on whom? On the assessee who has taken up that particular APA or the ruling. It is to that person only that it is binding. Is it binding therefore on any other person? To that the answer is no. Is it binding then on to any other person? To that, students, the answer to that is no. I hope that all of you are clear with this one. All of you are clear with this one, students. So this is all things has to be looked upon. Now coming to this particular important notes and all, students, as you all know, the rollback condition, one of the rollback conditions is that the assessee should have filed. One of the rollback conditions, students, is this, that the assessee should have filed what, students? The assessee should have filed the indeed, the assessee should have filed the ROI. The assessee should have filed the ROI primarily for that particular period within the due date of section 139(1). Now, students, what they are trying to say, this is a CBD circular that we are doing it, by the way. I should tell you that what we are doing right now is a CBD circular. So, students, over here, what happens is this, that supposingly, students, supposingly, that is true, Jinesh. That is only for the purpose of avoiding the future litigation, as you are mentioning it over here. You, Jinesh, I remember one of my students, Jinesh Doshi from Walkeshwar. He was my student. He is a CA already, way back, and pretty much a very topmost position in Kapadia. This was firm. And now I think he is in a different company altogether. His name was also Jinesh Doshi. So here, students, in this context, he was from Walkeshwar. Anyway, students. So point number 3, students, if you see over here, the applicant does not have the option to choose, first one, coming on the first particular part. And what is that? That if supposingly you want to do the rollback, Students, if you want to do the rollback for a particular year, we have already told that the ROI should have been filed within the due date of section 139(1). The ROI should have been filed within the due date of 139(1). Now, what if the ROI is filed within the due date of 139(1) and subsequently the SSC wants to revise the return? Can that revision, is it possible? Whether that revision of the return of income, is it possible? And the answer is yes, it is possible. Okay. Now, if the revision, if it is possible, next question is this, that whether the rollback that the SSC wants to take, will that still remain as it is? Or there would be a change now in the rollback criteria? The rollback also will remain as it is, because the revised return, students, the revised return steps into the shoes of the original return. The revised return, does it steps into the shoes of the original return? And the answer is yes, it does. And that is the reason why, students, this can be done. Now, but what if the original return is a belated return, and thereafter you file a revised return for that particular rollback year? So whether that year, will it be eligible for rollback in this kind of a circumstances? Will it be eligible for rollback in this kind of a circumstances? And the answer is no, it will not be. So this is the point that you should always keep in mind. Point number 2, students, if you see, obviously, students, the transaction for which you have taken the APA, and the transaction for which you want to do the rollback, they need to be the same transaction, students. The transaction for which you have taken the APA and the transaction for which you want to do the rollback has to be the same transaction. That is what you have it, point number 2. And how do you confirm that they both are the same transaction? Through the FAR analysis. That is the functions performed, asset employed, and the risk which is assumed, that needs to be the same. The functions performed, asset employed, and the risk which is assumed should be the same. If all these 3 happens to be the same, students, then in that particular case we will say that yes, because of this very reason, students, in this context, we will say that the rollback which we want to do should be done. Now, coming to third point, students, let's come to third point. The applicant does not have the option to choose the years for which it wants to apply for rollback. The applicant has to either apply for all the 4 years or not apply it at all. So applicant does not have the option to choose what? Choose the years for which it wants to apply for rollback. What they are trying to say here is that, obviously, students, is it possible I do a cherry picking? This was a question which was being asked in a theory. Can I do a cherry picking of it? That if supposedly there are 4 years for which the rollback, as you all know, is available, out of 4 students I want only for 1 or maybe for 2, but I don't want it for all. Is this cherry picking allowed? Answer is no. The option is very clear, students. Either you take it for all or you take it for none. Either you take it for all or you take it for none, students. Is that clear to all of you? Either you take it for all or you take it for none. I hope that every one of you are clear with this one now. So, students, either fully or it will not be available at all. Either it is fully or it will not be available at all. Shall we go further in this context, students? Fine. So let's look upon to this one further. In this regard, in this context, let's do that. So, students, over here, if you all see students, over here, what all that we all get it, students. The next one. Have a look to the next one, students. Students, all of you take this particular point number 4 now. Point number 4, students. So students, if you see it over here, point number 4. So see what happens over here is that in the case of appeals filed by the applicant is pending before the Commissioner Appeals, Appellate Tribunal or the High Court for the rollback year, if the ITAT has not decided the matter and has only set aside the order for fresh consideration of the matter by the loan authorities. With the full discretion of students, be very careful. In this case, obviously students, if the appeal has been filed by the applicant is pending for the rollback herein, then one thing which is there that with the ITAT, it is very important that the ITAT should not have given the decision. Because as it goes, if the ITAT gives the decision, students, or if the ITAT has decided on the matter primarily, then that's it. It's the end for it. You cannot take up the rollback for that year. But supposingly if the ITAT has not decided on the matter, but he has done what? Only set aside the order for fresh consideration, but with a full discretion at their disposal. This is very important, that they are also giving a full discretion, students. So if they are giving a full discretion in this particular context, then in that particular case, whether the benefit of the rollback can that still be given, and the answer is yes. Now this is a very, very critical part of the full discretion being given, because supposing students a full discretion is not given, consider the fact that the full discretion, students, has not been given, and maybe the ITAT reserves that entire scope of the reassessment because they have set aside the order and they are remanded it back to the assessing officer. So if supposingly in this particular context, if they have not given a full discretion and they are simply doing a set aside kind of a scenario, then in that particular context, students, what is that we will say? So we shall say in that particular context that if supposingly they have set aside and they have also freezed further, students, they have also freezed further as to what would be the scope further of the reassessment by the AO, then in that case, students, it is as good as the ITAT has given the decision. But if the ITAT is not setting up the scope of the inquiry, then that's a different thing. If the ITAT, students, is not setting up the scope of the inquiry, then that is a different thing, students. So this is how you have to be looking into it. So this is what, students, you need to be looking into it. I hope that all of you are clear with this one. So this is precisely how you have to look into it. Now look into the next one, students. I think this was already been done. So now point number 6, students. Point number 6. So if you see point number 6 over here carefully, students. So what is that you will get it? So in the point number 6, these are the procedures that needs to be satisfied by whom? By the assessing officer if he wants to take up the benefit of the rollback. And what is the procedure, students, that needs to be fulfilled? These are the things. Let's take one by one the steps which are to be involved. If the rollback provision cannot be given effect to or for any of the rollback years, on account of the applicant not taking the action, applicant not taking, students, the action specified in the following sub-rule of Rule 10 are A. And what is that action which needs to be taken? First is filing of the modified return along with the proof of the payment of the taxes. Filing of the modified return along with what? The proof of the payment of the taxes. Second one, students, is about the modified return to be furnished in respect of the first of the previous year for which the agreement has been requested for in the application. That's the second particular point. The third one, students, that you can see over here. The third one, students, if any appeal is pending before the Commissioner appeals, the appellate tribunal or the High Court for rollback year on the issue, students, which issue they are talking about it? On the issue of, students, over here, which you can see, if there is any pending before the CIT appeal or the ITAT, which is subject matter of the rollback operation, and the SSC should have withdrawn the appeal. This is very important, students. Is it possible, students? Just think of it. Is it possible for you that you can take up the rollback benefit, and along with that, students, you can go also with, students, along with that, you can go also with the rollback application? Rollback application, students? Is that possible, students, in this context? And the answer to that is no, that is not possible. You cannot have both the best of both the worlds. Just keep that point in mind. One cannot have the best of both the world, students. Is that clear to all of you? And this is what they are trying to suggest in this case. One cannot have the best of both the worlds, so that you cannot have at one particular place this particular proposition, and on the other particular place you want to take it out completely. Students, this is not possible. The third one, students, if you can see over here, third one, if any appeal is pending before the Commissioner of Appeals, Appellate Tribunal or the High Court for a rollback year on the issue which is subject matter of rollback provision, students, for that year, the said appeal to the extent of the subject, to the extent of, students, in this case, to the extent of this one, students. So, as I told you, students, they need to withdraw this particular appeal. So, withdrawal of appeal is mandatory. Without withdrawal, you cannot think of primarily taking this particular. You cannot have the. See, rollback is only for the sake of. Think logically, na? Rollback is only for the sake of withdrawing the litigation. Withdrawing the litigation. That is the only point. Withdrawing the litigation, students. So, therefore, if it is for withdrawing the litigation, you cannot maintain this particular appeal. This is point number 3, students, very important. Always mark this to be an important one. That is it, students, in this context. Thereafter, students, the next one couple of important points, and then let's move on further. So, students, over here, if I have to just say to all of you, this point number 10 and 11. 10 and 11. For 11, I have already drawn the diagram. Just keep that in mind. 10 and 11, students, are very important. These two. What is 10 first? Let's have a look to that particular point. In the case of 10, students, in this regard, in the case of 10, the applicant has an option to withdraw its rollback application even while maintaining the APA application for the future year. While maintaining the APA application, meaning thereby, see, if you don't want the rollback, see, nobody has forced you to take the rollback. What was important was only the APA. What was important was, students, only the APA. Do you all agree to this one? What was important, students, was only the APA. Nobody has forced you to take up the rollback. I hope that every one of you are clear with this one. And if that is the case, students, if that is the case, then what we will say that, but the reverse students is not possible. What they are only trying to say is this, that the reverse students is not possible. And what is not possible, students? In this context, the reverse is not possible would mean this, that I don't want the APA and I want to retain the rollback. I don't want the APA and I want to retain the rollback, students. Is it possible, students? Answer is no. Is it possible, students? And the answer is no. So this is what the situation is, students. This is what the situation is, students, in this context. I hope that all of you are clear with this one. Now, in that case, students, now then let's do the last point. The last point, students, and the last point is point number 11 over here. So the point number 11 which has been there. In case of merger, students, in case of merger or demerger or of a companies, the person or company who makes the APA application would only be entitled to enter into the agreement and be entitled for the rollback provision in respect of international transaction undertaken by it in the rollback years. International transaction undertaken by it in the rollback year, students. Other person, companies who have merged with this company, can you see this one? Who has been merged with this companies would not be eligible for the rollback provision. Will not be eligible for the rollback provision, students. Now what therefore it is, if you can just have a look to this example which I have made it, students, this example. So A Limited, in fact, they have taken the APA. A Limited, students, they have taken the APA, students. Thereafter, students, if you see that they have merged with this one, students, as you can see clearly, they have merged with this one, with B Limited. Merge with B Limited, students. Now with B Limited, the question is, with the B Limited, the question, students, all of you is, the B Limited wants to take up the rollback of the APA which was taken by A Limited. Here the B Limited wants to do the rollback of the APA, students, which was being taken by A Limited. Is it possible? The answer is no. That is what point number 11 is all about, isn't it? That is what we have done, that point number 11. That look, if this is, see, again read this one, students. In case of merger or demerger of companies, the person company who makes the APA application would only be entitled to enter into the agreement. So therefore, who is the person? A Limited. Okay, other person companies who have merged with this company, who is that other person? B Limited, would not be eligible for rollback provision. So students, with that we are done with this particular theory part of it, and in fact, in the extent, we effectively are done with the transfer pricing except for the thin capitalization. Now students, I will be using to do the thin capitalization, students, in my next session, and also we will enter into the PGBP area. The PGBP area, the computational part on the PGBP area is what, students, I will be focusing now in my next particular session onwards. Clear with this one, students, all of you? Now students, if that be the case, in this context, again, just for the last point, students, a final reminder to all the students, because still there is an effectively 1.5 hours left for the proceedings, students. 1.5 hours is left, students, for the proceedings, and therefore just do tell your friends, students, about this, about the price hike which is going to take place in an hour's time. 1.5 hours time, students, maximum. Please do let your juniors know about it, that there is a price hike which is going to take place, and be that as it may, your friends or your juniors may have their attempt due in November 22, May 23, November 23, irrespective of that, do let them know about this feature. And what will be the more important point, that if in the next 1.5 hours, if they are taking up the subscription, in Unacademy, be it for group 1, be it for group 2, or be it for both the groups, in the next 1.5 hours, and they apply this code, which code, students? CADS. They apply this code CADS, then they, as you all are aware, they get an outright 10% discount on their subscription amount. They get an outright 10% discount on the subscription amount. I think all of you are aware of that. So therefore, do let them know about the same and tell them that the referral code that they need to put is CADS. So students, this is what I will suggest to all of you. Do let your friends know about the same. Fine. So that exactly is the point. So students, see you then in the next session. Now next session, students, would be next week. I'll be having the next session in the next week. As I told you, the non-resident taxation, I think one lecture, thin capitalization I will do. I will also do general anti-avoidance rule. The general anti-avoidance rule, thin capitalization, that are the two areas which I'll do in the compiler series. And finally, students, then I will move into my next category, which you all are aware, which is about what? Indeed, students. The next category happens to be PGBP. Fine. See you in the next week, students, in our compiler series. Do take care. Bye-bye.